firstly, thank you very much for having me on tonight, and greetings from Westchester, New York. I'd just like to say that I really am thrilled to be on. My journey in terms of my relationship with India began nearly 3 decades ago when I was in the apparel business. And I used to travel in those days nearly every month to India. In fact, I was one of the first people to actually spend time down in Coimbatore and a large part of Rajasthan. So, I certainly am excited to be on tonight. And I'm just going to take you on a journey that Orbvest really has experienced around the world. And when I talk about the world, I'm talking about all our countries globally that we raise equity from. And to start off with, I just wanted to go to the first slide, which is in terms of wealth. My perspective of wealth is that most people around the world, whilst you heard from the previous speaker, Ankur, who's got an amazing business, in terms of growth, most people are looking to just grow their wealth in a moderate manner. They're looking to take their hard-earned money, hopefully, and just continue to exemplify those returns and ensure that they can get consistent growth anywhere in the world that they put their money. The challenge is where. And so most people know about equities. However, at the moment, I foresee certain challenges in that. Number one, people have to ask themselves, is there further growth? Is it overvalued? At what point do they see the volatility move back in? And really, over the coming couple of years, one has to ask yourself the logical question, how much further can it keep going? Because the PE values are certainly becoming lofty. And so in terms of other asset classes, you've heard from other speakers about private equity, alternative investments, and then also there's the asset class of real estate. So in terms of the next question, we find not only in countries that are emerging market countries, first world countries, Canada, you name it, China, Brazil, the goal for most people is they want consistency in their returns, and they want to see a compounding effect in their returns. What we talk about consistent returns is anywhere from 7% cash on cash they would like per annum, together with double-digit returns when obviously you take into account the capital growth, or when something is sold, or when your investment realizes its ultimate exit, and that is known as the IRR, internal rate of return. And preferably, people would like to have it in a first world global currency. And off the back of that, in terms of real estate, people would like to get into real estate. However, what we have found as Orbvest over all our years in business, from the 2012 into the 2014 years until now, is that the first question people have to ask themselves is, where do they even start? Which country? If you take, for example, the United States, it's like looking at 50 different countries. Then, of course, you require a large amount of capital, or that's the perception. Then, of course, you need debt, because unless you're going to buy it with only equity, you need some kind of mortgage or debt, and you need a track record. It's very complicated to invest overseas, and there's a lot of compliance and regulation. So for most people, it's out of the reach of investing overseas in certainly real estate categories. In terms of the US real estate, and I'm going to get back to that subject of investing in real estate, but in terms of the US, and I can only talk from my perspective of many, many years in the US, certainly we as Orbvest believe that we have focused successfully on the healthcare niche. You've heard about multifamily, which is apartment buildings. You've heard about retail, hospitality, and various other sectors. We like to describe healthcare as, think about your doctor or dentist. And this happens anywhere in the world where I travel at the moment, or I used to travel prior to COVID. How many times do they move, or have they moved, in your opinion, in the last 5 or 10 years? The answer pretty much anywhere in the world is they've moved once or never. They're very, very stable tenants. The next thing to ask is, are they profitable? They're highly profitable. Medical practitioners in the healthcare niche are very profitable. They are also tenants that sign very long leases. If you think about typical residential is normally between 6 months and a year. That's how long your lease would be. In commercial, it would be from 3 years to 5 years. That's the normal length of the lease. In the US healthcare market, it is completely common practice for people to sign leases of between 5 years up to 20 years. It is remarkable. And it's because they just don't want to move. They don't want a new landlord buying their building and then being kicked out, because they are well known in the community, and they also are, a presence in the community. And so that is where their clientele are. The last thing is, when we bring this all together, we have been saying as Orbvest for nearly 6 years now, if and when a correction or recession arrives, you'll want to be in healthcare. And we believe that it's one of the most recession-proof asset classes. I'll speak a little bit later about how our strategy was tested over COVID, but suffice to say that it's withstood tremendous success. In terms of the healthcare niche, we need to then zoom into what exactly we believe we're talking about. And that is what is known as an MOB. MOB stands for medical office building. It is not a hospital. It is a medical office building that has multiple tenants in that same building. We like to have often between 8 and 12, if not more, tenants. That is a mix of healthcare practitioners. It's normally in a great location in one of the states in America, and it is multi-tenanted. It is built in a way that creates an ecosystem. So when you go and see one medical practitioner, they're going to refer you to x-rays, or to have your eyes tested, or to have something in terms of a other kind of oncology test, or OBGYN, which is around women and birth, etc., and various other factors. So this building acts as a destination center, and also an ecosystem that people leverage off each other. All MOBs predominantly that are looked at are profitable on day one. So most people who acquire MOBs like ourselves, we do not take risk. On day one, when we acquire them, they generate great returns, and they are fantastic investments, and they have long leases. So another aspect of the United States healthcare niche is the aging population. Remember, one of the most important things is, if you have a growing population, that always bodes well for people in this niche. And if you have an aging population, it certainly exemplifies it. It is a known fact that people who are older than 65 will visit a medical practitioner 5 to 6 times more than a younger, healthier person. So you can see the tremendous growth in the 65 plus baby boomer population, and certainly going from its current levels of around 40 million up to 80 million. In fact, there is a concern in the United States that there won't be enough medical facilities available in the coming years ahead unless they build a hell of a lot more. So it is a very strong, vibrant, buoyant niche in the United States economy. And of course, it's critical to the entire economy and well-being of the United States. A little bit of information on the sector. The healthcare niche in America is $1 trillion sector. I'll just focus on a few of the highlights in terms of the number of properties. This is a stat that was from last year. It is anticipated that this is going to grow to more than 40,000 properties offering healthcare. That means every single month there are buildings available that are being bought and that are being sold. So it really is an enormous market. We focus on the medical office buildings, and we are starting to go into other areas of post-acute care and life sciences and biotech. However, those will be done in a very measured manner. The other thing which we need to look at when we discuss real estate and when we discuss the opportunity of real estate in the United States and healthcare is what will happen with disruption. So there is a lot of disruption that's happening across the world. We all know fintech. I myself was part of a previous fintech business and sold out of. So in terms of whether it's robotics, 3D printing, nano printing, artificial limbs, stem cell, you name, genome sequencing, all these things are going to play a pivotal role going forward. However, for those players that are on top of it and understand how it impacts their strategy and are looking for buildings with these kind of medical practitioners, it certainly bodes well. A number of our buildings have tenants in them that were pivotal in fighting the COVID crisis and were the testing centers designated for the states, like a Life Hope Lab in Atlanta. We also have the headache clinic and the sleep clinic, where what they do is they literally put magnets on, and because people are sleeping less and less because of technology and their cell phones, they are able to reset the magnetic waves in your head to allow you to go back to the previous state of allowing you to sleep well at night. These are the kind of disruptive technologies that are really taking off in the United States in a very, very big way. So the question is really, who is Orbvest? And so together with my partners, we have grown the company Orbvest into a thriving global real estate company. We acquire real estate assets only in the United States, and then we syndicate it around the world. We're one of the very few players in the entire world that does this. Why? Because myself and my partners originally all come from outside of the United States. I'm an ex-South African. I came over, I did an executive management program at Harvard in 2012. I love to start businesses. I've only done startups my entire career, and I grow them to very large scale. I grew a business to a $5.5 billion book. I had 350,000 customers and 4,000 staff. And so off the back of this, when I went over, there were two things I loved about the country. And it's important because I really do believe I know what people outside of America are looking for when they invest into America. And so I felt it was a great place to educate my kids. And secondly, I also thought that it was fantastic in terms of its fundamentals of stability and growth in the United States, notwithstanding the odd disruption you might get from elections, whether it's Democrats or Republicans. It's still a great place to invest with a very buoyant economy. So a couple of things about the company. We, over the last couple of years, have shown dramatic growth. We are well poised to grow the portfolio by between $150 and $200 million a year. That will take us to a billion-plus portfolio. And by 2025, we will move our primary listing from the Seychelles to NASDAQ. And we set ourselves a goal that by 2023, we would be raising equity from 10 countries. In fact, already I can tell you we are over 10 countries. The actual number of investors is well beyond that. And so you can see our kind of indicative returns. Total returns are between 11 and 17% total IRR. We pay out 8% cash on cash. That means cash dividends per annum paid out quarterly. And the minimum investment is $5,000. However, the average is a lot higher. So generally what you'll find around the world, if you talk about Canada and Brazil and China and places like that, is you'll find $100,000 and above. However, in other emerging markets, very often you'll have someone who wants to dip their toe in the water, and what will happen is they'll invest $5,000, and then their very next investment will be $20,000, and so it grows. And so we really do cover a very wide ambit of allowing people to really become real estate landlords in the United States with very simple processes. And what we really are here to do is we are here to make sure that we take people by the hand and we take international investors and we help them invest in the United States in a great asset class. And then we make sure their money is safe and protected and that they'll pay back their dividends and they receive consistent communication and reports. And so a bit about my team. In terms of myself, I've spoken about what I do and what I love to do and my passion in building businesses. I've got a very proud reputation in startups, and I am under a lot of pressure often because I am the custodian of people's money from around the world, and it's a very important and a privilege to be able to do that. In terms of Justin Clark, many of you would know there's a company in America that is one of the largest online real estate companies called Zillow. He started a similar company to Zillow in the African continent, grew it across the whole of Africa, and sold out to a European company, and a real brilliant individual, both in terms of startups and also in terms of fintech and growing businesses. And Henny beside note, That's where a lot of our IP comes from. Henny is one of the largest owners of medical office buildings outside of the United States and has been doing so for 30 years. And then Michiel Lucas, who has been acquiring buildings in the United States going on 7 years and has a vast network together with our CFO. And so that is the team of Orbvest. It is a very experienced team. It is a team, all of us have proven track records in scaling businesses globally. In terms of our number one criteria, it's all about, for us, preservation of capital. We will not do any deal that is risky. We do not go into a deal unless it is income producing on day one. So people know from the very first quarter, they're going to be getting their dividends. And we'll talk a little bit more about those actual buildings. And then a little bit more about the portfolio and the number of buildings and our returns. In terms of the business, as I said, am based in New York. We have an office in Atlanta, Georgia. We have partners and a presence across all the states we trade in. And then also we have various committees and strong boards. I'll just mention a couple of the people. James Saperstein, he is the CEO of one of the biopharmaceutical companies in the United States and has taken a number of companies to a listing. Darren Jacklin, well-known personality in Canada. He literally has consulted to most of the CEOs of Fortune 500 companies in and around where he lives and around the world, and also has taken a real estate company, which is a new concept called EXP, around the world. You'll be hearing a lot more of it as they continue to scale to magnificent heights. Bharat Mehta is an Indian individual. Their family is one of the largest independent private owners of the REITs in South Africa and a well-known successful personality. Tini van der Mesht. Tini was actually the person tasked with one of the largest insurance companies to go and set up operations in India and spent a tremendous amount of time, funny enough, in India. And then I'll just mention Eric Gonzaga, who's one of the top people in the USA from Grant Thornton, as we know, a well-known brand. In terms of the buildings themselves, we as the business are not the only individuals that decide which buildings we want. We have an independent investment committee. These individuals have been on the committee for a long time. They've served in the top banks in various places, and they really have decades of experience in terms of which buildings to buy and which not to potentially buy. And so where do we actually buy these buildings? So the important thing to note is that these buildings are spread across states only where the fundamentals stack up. For us, it all starts off with the most important one, which is location, 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 and growing population. One would hope if you buy in an amazing area or in a town in the United States where it's growing and where the fundamentals are that it's landlord friendly with strong escalations built into the leases, that a property would hopefully be a lot more in 5 years' time than it is today. We don't bank on that. We bank on the fact that the fundamentals of the operating income, the rent you receive, together with escalations, are solid. People also believe that there's no inflation in the United States. That is completely incorrect. There is inflation. It can sit at around 1.7%. Our leases increase between 2 to 2.5% every year, which means you're getting real tangible growth in your revenue. And then we do have a little bit of value add, which we use in the buildings, where a building is maybe 80-85% occupied, and we'll lease it up to maybe 90-92%, or where the rentals are under market and we are able to then replace those tenants with rentals at a higher rate. So you can see the areas we're in. Certainly the areas of expansion are into Arizona, Utah, Colorado, and Florida. In fact, we'll probably be closing our first deal in Florida in the next month. And obviously areas which are incredibly popular in the United States, which have shown enormous growth in the last couple of years and continue to really be powerhouses, is Texas and Georgia, together with areas around New York and the tri-state area. In particular, Texas, there is a perception that it's an oil state. Not really. It used to be. Now it's a very diversified economy, as is Georgia. In terms of our performance, this is really where it all culminates. What do we produce for investors? So we won't go into a building unless on average it can produce more or less 8% cash on cash. And that is off solid results, solid tenants, long leases, and that the building is profitable on day one. And so you can see our actual results right the way through from 2014 all the way through until now. You'll notice at the bottom, there are a couple of buildings that show 5,7, 5,9. Those were large buildings, 200,000 square feet, where in fact, there was a value add play and we had leased up the building before we even acquired the building, which means that in year one, it might be 5,9, then it goes immediately to 7.5, 8, and then 9, and then 10% cash on cash. And the average is above 8. So you can see very healthy returns that we generate to investors from around the world. This gives you a feel of the kind of buildings. I'll talk a little bit more about it. In terms of one of our latest offerings, this is what you would expect from Orbvest. A beautiful building. This actually is in the state of Arizona. We're thrilled to have actually got this building. This building certainly ticks all the boxes. It is in the prime medical corridor. 2 of the tenants alone have a AAA Moody's rating, S&P and Moody's, and they have very long leases in hand. We will hold the building for 5 years maximum, so you can see that even when we sell, it's still got great fundamentals in place for the next acquirer of that building. The next thing is that over the past year and a half, there's been quite a significant change in the business. And what's happened was that as we were starting to meet family offices and large institutions at various countries in the world, they were saying to us, we absolutely love the team, we love your track record, we love your niche, we love everything about you guys. The challenge though, is that each building is a separate building. Why did we do that? We did that to protect the investors, to make sure that when you invest with us, you invest directly into the building, and also you get to pick and choose which buildings you want to go into, because freedom of choice is very important. You want to be able to come to America and touch and feel the building and know that you're a shareholder in that building. They said, the difference is we're not going to invest $1 million per deal into separate buildings. Why don't you start a fund? The second thing is that we have moved into a realm of helping a lot of people with their retirement money, and their retirement funds ultimately are what they want to utilize to generate dividends. And so we felt from a diversification perspective, it was time to start bringing together a portfolio, a mini fund. So it's Orbvest Diversified Holdings, ODH. It is really 8 to 10 buildings minimum, the same buildings we've done all along for 6 years. It's a multi-tenanted building in a great location, which is profitable on day one. And this ODH product will allow people to really, from a very small amount of money, that same $5,000 or whatever they want to put in, up to 100,000. We have people at $500,000 and $1 million come into the product and be able to have instant diversification, and they will still generate their 8%, give or take, cash on cash, and 11% plus IRR, which is the total returns. And so we launched ODH1 about 3 months ago. It was oversubscribed literally in 15 days. We launched ODH2. We had to rush that to the market. That was oversubscribed in 10 days. And we bring ODH3 in the coming literally week or so. And we have no doubt that it's going to be oversubscribed again. So tremendous demand for this kind of product, again, producing great dividends. Every single deal we have comes with a brochure. It comes with a PPM, which is your property supplement, and it describes everything. Everything is transparent. It's upfront. You know what you're going into. Everything is highlighted, and specifically what you need to understand is when you go into apartment buildings, there's a lot of value add. It's really looking into a crystal ball. You know, what are the rents? What is this? Are we going to get it completed in time? You know, what are the certifications? There are so many moving parts. Remember, in healthcare, you generally are acquiring a building where most of the tenants and the leases are on a triple net lease. What that means is that nothing's really going to change. The landlord literally gets the rent. Everything else that happens to be an expense, the tenant will pay for themselves, which means if you've got, for example, 8 tenants all paying $10,000, you will get $80,000 pretty much for the next 5 years. Your expenses are locked in, that building generates a profit, and it's paid out to the shareholders and investors on a quarterly basis. And so it's easy to be able to manage the buildings if you know what you're doing and you have the necessary systems and RP. And again, that's what we do. We don't raise any equity in the United States at this point. It may change going forward, but our focus as Orbvest has been to help people from around the world invest into the United States with money either offshore or in their country and then get their returns. And this is where we've excelled and we've focused on. So you can see in this example over here, it's actually from one of our buildings, $10,000 investment, you're earning your 8% per annum, you get your capital gains, and then there's a pre-tax amount and an after-tax. We will pay all the taxation necessary in the United States. When the person receives their money back in terms of the interest and the capital gain, they need to disclose it in their country or whatever their tax jurisdiction is as capital gains, as you would anything you received in terms of the stock market or any other investment. In terms of how people actually assess their investments, we have a very sophisticated platform. It really is quite magnificent and handles the requirements of most of our investors around the world. It is positioned that people get consistent communication. You'll get a quarterly report on every single one of your investments in terms of what's happening in the United States, what's happening in the area, what's happening with your buildings. And so it's easy to ascertain at all times, transparently, exactly where you stand. You know upfront what the fees are, and you know exactly how that building's tracking quarter to quarter. COVID. So if we look at how Orbvest did, it was really quite a stressful period because as the world started to lock down, we had told people for literally 6-7 years, you need to be in healthcare. It's one of the most resilient asset classes in the world. We pretty much found that we were unaffected. From the time that the buildings were locked down, remember the US paid out $2.2 trillion. Almost all people in America and businesses received 2.5 months worth of stimulus, which meant that they could pay for their rent and they could pay for their staff. But we found that most of our medical office buildings remained open. All of them were deemed essentially essential services. That's healthcare. As you know, even in India, if a person had an emergency, you have to go to the medical practitioner. You can't all just stay at home. And so what happened was all the COVID patients went to hospitals and all the other patients went to medical office buildings. And so we averaged more than a 95% collection rate right throughout COVID. We consistently paid our dividends. We weren't impacted. And since then, what's happened is the spotlight has been shone on healthcare and in particular, the medical office buildings. And so hence the reason why we've now managed to also find great partners around the world. And we'll talk about our outreach distribution partner, Finolutions, and our plans for India. In terms of just bringing this all together and in conclusion, Orbvest is moving into India and Orbvest is wanting to raise equity for our buildings in India. I myself, as I mentioned, have spent a lot of time in years gone by in India. I love the country. We see that our strategy and our proposition is resonating not only in India, but in Canada, Israel, Brazil, China, all over the place. It really is quite phenomenal. In fact, we now have investors from over 20 countries. You'll never hear me talk about it. I'll only ever mention the 10, but it's just interesting to know that it just continues to gather strength each month and each quarter. We see tremendous growth in India because of the fact that we believe there's an enormous amount of people that are looking for these stable cash dividends. I'm not saying everyone should put their money only into real estate, and I'm not saying everyone should put their money into equities, but I do believe in your portfolio and for your clients, you should carve out a small piece that is just allowing your clients to sleep well at night and to know that they're getting these consistent dividends. And generally, what they'll find is when there's times of volatility up and down, people end up spending a lot more, investing a lot more into healthcare because they just find it so simple and easy. In terms of Finolutions, they're our distribution outreach partners. I know that they have a very proud reputation in India, and certainly many of you know them, and we look forward to working with them in terms of their experience and their knowledge, moving money out of India, paying it back into India, and all the taxations, K1s, etc. And lastly, we look forward to building wealth for investors across the entire of India. Thank you very much.
Thank you, Martin, for this very, very interesting session. Was actually very, interesting for me personally to know these opportunities which we don't really, get to know about in a regular course of work. So, audience, if you have any questions, please start shooting. We have another 10 to 15 minutes to go. 10 minutes to go for the session. Let me start with a question for myself, Martin. How are these investments regulated? Let me ask you, how is Orbvest regulated?
So Orbvest ourselves are heavily regulated. Naturally, in the United States, we are under the SEC, and we lodge according to 506C, which is a certain dispensation that allows us to raise money from around the world. We as a company are actually listed on the Seychelles Stock Exchange. So Seychelles Stock Exchange is similar to Mauritius and Cayman. It's part of the World Federation of Exchanges. There is obviously the necessary AML, KYC regulation when you want to invest. It is quite simple. I think everybody's used to it anywhere in the world when you invest now. And we're under the necessary regulations over there. In, for example, places like South Africa, we're part of the Financial Services Board. I know that in India, we will have the necessary regulations in place. And each country has its own regulations. Funny enough, at the moment, probably the most regulated is Canada, where in fact the necessary licenses, broker-dealer licenses, the way you communicate with people. So regulation and compliance is an enormous part of our business, and we won't go into a country unless we know that everything is ticked and that investors are able to, in a safe manner, invest seamlessly and know that their money's protected, and that they can move it back in a compliant manner, because that's one thing that everybody is looking for in the world: simplicity.
Sure. There's a question from Parth here. What document does investor get to confirm their ownership of the properties, and how is this different from REITs?
That's a great question. So remember that a REIT ultimately is a listed or unlisted REIT, but most people know about a REIT that is listed on the stock exchange. So a REIT is subject to the share price and the volatility of the markets. So if you look at the REITs in the world, when COVID hit, many of them, if you were in hospitality or if you were in other asset classes, plummeted. And that's the reason why we are not a REIT. So we like investors to be able to see in the structure, you invested into company A, which went into the US, which went directly into the holding company, which bought the building. And every single person gets a transparent report all the way up in terms of what you invested in, your ownership in the building. And so everything is detailed to give the person the sense of comfort. The direct question is, how do we compare? We are not in any way linked to any volatility on the market. You're buying a building or 8 buildings just like you would do if you were in Delhi or in Mumbai. So the only difference is that here you're buying it in a fantastic place. If I take, for example, Atlanta or New Jersey near New York, or Dallas, Houston, San Antonio, Austin, the 4 metropoles in Texas, where you know it's an enormous, huge building. You can go onto the internet, you can Google it, you can come to America, you can touch it. We've got one building there that's 2 enormous buildings, 12 stories high, and it's so exhilarating to have people and buyers from around the world come there and touch the building and know that this is what they own. So that is the real answer. With us, you're investing directly into the asset or into the grouping of the buildings, and we will show you how you have ownership in it, and it is not linked in any way to volatility or the stock market, which unfortunately REITs are.
Okay, sure. And the next question from Mahesh, how we can track our investments? Is there any dashboard that you provide?
Absolutely. So one of the most important things is that when you scale a large business, I always say to people, the way you do it is you got to get 2 things right. You got to love your clients and you got to love your employees. And so I've been doing this for 30 years. And the one thing that we always started with was a magnificent dashboard that from the moment you register to the moment you put your money in, to the moment it gets invested into a building, everything is tracked. Everything is online. You can see every single thing, but that's not what we focus on also. I have a huge team. I like to build relationships. I'm a bit of old school. So while I build fintech businesses, I love to have teams that are able to assist you anytime you want. You phone us. I've got relationship people. They will answer it. They will print out stuff. They will email it to you. That's what we do. People often ask me, why do I make my life so difficult trying to be across the world and doing it still partly on this basis? And our view is that we don't want to just build a big retail business. We want to leave a legacy of helping thousands of investors around the world, themselves and their families, building their wealth. And our model works well, and it's being well received.
Sure. So the next question is from Prakash. Martin, you mentioned that all details are transparently shared with investors. So could you throw more light on what all information is contained in these reports that you share with investors?
So in a typical brochure, what you'll get is you'll get a whole segment on where the building is, exactly why we think it's a great building. You will then get the actual building, how many square feet, the number of tenants, every single tenant, every single lease, what they're paying, all the fundamentals. It then gives a comparison to other buildings in the area, so you know that we're buying it at the right price. Because remember, real estate, you don't make your money when you sell. You make your money when you buy right. So if you buy right or below replacement value, and you can see that your risk is mitigated, all the way through to every single year, what our projections are and what we intend to sell it for and why we intended to sell it at that price. So it's an important point. If we're buying at a 7 cap rate, so just so everyone understands, a 7 cap rate means if you're buying something at $1 million, it would produce $70,000 income. When a cap rate goes up, it means that things are getting cheaper. And when it goes down, I know it sounds counterintuitive, it's getting more expensive. So we rely heavily on what we buy at. We don't have these lofty valuations that says we're buying at 7 and selling at 5. That's what you do in maybe multifamily, where you do a lot of value add. And so to answer your question again, between the brochure, between the constant webinars we have all the way through when we launch a deal, to the relationship manager who will reduce things in writing to you, to the property supplement, every single thing there is covered in it. I always like to say to people, our business was built on helping high net worth individuals. And when you have high net worth individuals, there's 2 things they always have. In the entire world, they'll have a good accountant and they'll have a good lawyer. And so in terms of our structuring and our investments, they've been checked out literally for 6 years by every single customer. And we encourage them to speak to their CPAs or their financial advisors.
Great. The next question from Parth, is this an open-ended structure where people can enter and exit anytime?
So each product, a building, is its own building, and then I'll get to the ODH product. So each building, for example, now we're going to launch next week, Medical 30, our 30th building, and that'll hopefully be in Arizona. And that building will have a webinar. We will go live. We will say we're raising, call it, we also buy buildings on a 65-35, which I didn't mention. A 65-35 means on a $15 million building, you'll have a $10 million mortgage and a $5 million slug of equity. In America, they sometimes go 75% even higher. We don't. We want to be conservative because we don't want to ever have a capital call. So assuming it's $5 million, we raise, it's first come, first serve. If you go into our ODH product, which is the one that spreads it across 8 buildings, ODH always has the first priority stake in these buildings, and it will have a small piece of each building. So first come, first serve, unfortunately, but we certainly do like to prioritize our new channels and our new countries around the world. So it's not an open-ended, it's open, we raise, we close. After however many years, whether it's 3 or 5 years, we sell.
Sure. I would like to ask you a question, Martin. is there any leverage in these investments? I mean, I believe LRS does not allow leverage to an Indian investor.
So in terms of, there's not what you would call a leverage. The buildings are bought on the basis of a 65-35 debt to equity basis, which is a consistent transaction across any asset class in the world, whether it's any building. And so we don't necessarily take a portfolio and then gear it again. We don't do that at all. And so each investment is its own separate investment, as I said, unless you go through ODH, which then spreads the money across 8 investments.
Sure. There's a question from Pavan. What is the tenure of products? Do we get ownership certificate and can we transfer or sell it in open market or to your company?
So the one thing that we always like to say is that when you invest in real estate is a more of a longer term hold. It's the same as if you had to do private equity transactions. Private equity, you would buy a stake in a company and you would wait a few years. So we always encourage people to see real estate as longer term, but it's more consistent and you know your money's going to grow. So if it's going to grow, call it at 10, 11, 12% per annum, including your cash dividends and what you're going to sell for, you're going to pretty much grow your money by 50, 60, 70% over the 5 years. Having said that, although we don't have a fully fledged trading secondary market, the one thing that has been astounding in our business is that the secondary market is absolutely flourishing. I'll give you an example. In COVID, people needed to sell some of their stakes because they had investments in 5 or 6 buildings, but in their personal circumstances, they're either immigrating, they wanted to educate their children overseas, and I know that's a very big thing in India, or alternatively, they were in trouble in their own businesses because of COVID. So they put their amount on the market. The person who sells, remember, gets their principal back. They've enjoyed 8% all the way along, but they get their principal out. The person who's buying is a lot closer to their sale and the exit. So their returns, instead of over 5 years, that capital gain amount, they're getting it over 2 years. So their returns jump exponentially. So it's almost been the opposite, that people literally jump on the person that's selling, all wanting to buy it at the same time. And so that's been our experience when people want to get out. But generally what we've found since 2014 is when someone invests and they're getting these consistent dollar dividends, they don't want to sell. They really don't. Can you hear me?
Hello. Yeah.
Yes.
So, audience, we just have a few minutes to go. If there are any more questions, please shoot quickly. Meanwhile, I have okay, I can see another question.
So maybe while we're taking another question, a very good point which people normally ask me is, what happens if I invest overseas? So you can invest from India, which has obviously got your various thresholds in terms of the $250,000 a year per person or family member. And then you've also got a lot of people that have money outside of the country. We don't require it to be in the country. If a person has money outside the country, a lot of people then will invest through our structures. There are 2 channels. The one channel is via our international route, and the other one is via our broker dealer in America. What then happens is with the dividends, people do 3 things. A large number of our clients actually immediately reinvest and compound their earnings. Because as you know, if you reinvest, compounding your earnings is one of the wonders of the world. It drives up your returns dramatically. The second group of people actually pay for various expenses like education overseas, educating their kids, etc. And it's a wonderful way to be able to build wealth and to support your holidays and expenses overseas. And the third grouping actually take it back into their country and they live off it. So if you take a number of the emerging market countries, in Brazil, for example, where your currency has depreciated terribly since COVID, I mean, those people there earning a lot of dollars have in fact enjoyed an increase in their amount. I mean, I remember when I used to come over to India, where the rupee was almost at 28 or 32 to the dollar, and it's now up near 70. So unfortunately, it's one of those things that emerging market currencies will continue to unfortunately depreciate over time, given the strength of first world markets.
There's a question from Prem. He's asking, are the dividends 100% paid out of the profits? Paid out of the profits. Are
Yes.
dividends 100% paid out of profits?
Absolutely. So when we say 8%, that's the one thing you always got to understand. You're investing in the building. The dividends come from the building. Sometimes what we'll do is we'll keep a very small amount aside in terms of a reserve. Remember, it always belongs to the investor. It does not belong to Orbvest. And that's an important thing we have spoken about. Orbvest is structured separately to the investments. Why? Because we always wanted investors to know that their investments are safe, what we call it the vault. It's in a separate company, separate LLC, separate structures, each individual building. And so that always allows the fact that we've got the largest, most powerful players on the ground and our partners who do management on behalf of the largest REITs in the American real estate sector. If anything ever happened to Orbvest, your building would continue seamlessly the very next day. But at the moment right now, you can see that Orbvest certainly is well on track to our listing on the NASDAQ.
That's awesome news. Next question from Samir. What is the approximate operating expense percentage of building you acquire and other operating expenses which are charged before the rental yield is transferred to the investors?
So that's a very good question. Every single building is different. Every single building comes from a different state, and every single building has got different rentals. What I would say to you is that I'm happy to share with you through Finolutions, any one of our projects, everything is transparent. So the moment we buy a building, we make fees as Orbvest upfront. It is not a large amount. It's to cover our due diligence costs and our various structures around the world. And then we make a very small percentage throughout the project. In fact, as you know, most AUM fees will be between 1% and 2%. I mean, up until the last couple of years, our AUM fees have been 0.3, 0.35. So they're very low. Where we like to be aligned with the investors is that when the investors do well, we do well. If the investors don't make their expected returns, we don't make our profit. And so those are the three fees. So when you see the actual breakdown, you'll see we bought the building, tenant installation, legal costs, closing costs, our fees, all disclosed, what we make every year, and the amount that comes to the investor is after all the expenses. There are no other hidden expenses, nothing. When we sell the building, here's the split. That's how it goes. And so that's the reason why I think for Orbvest, we have done so well. People often ask, why am I able to run a great company like this and give the bulk of it to the investors? It's because unlike American companies who have massive large overheads in dollars, as you know, which are very expensive, we're able to generate dollars in the United States and leverage international markets where we're paying a lot lower expenses for the exact same objective.
Great. So the next question, and audience, this will be the last question. We'll need to break now. So the next question is from Nagendra Raju. He's asking, how is the performance of real estate investment funds in your country, and what's the industry benchmark return?
So I can only talk about the countries that I know of, and that is the United States, it's Brazil, it's various other emerging market countries, it's South Africa. Real estate investment trusts have taken an absolute pounding, particularly if they were in retail or if they were in hospitality. Those in healthcare have done significantly better. We, as I said, are not impacted by COVID or any of the other fundamentals. Remember, when we buy a building and it's generating $100,000 a month, our tenants have continued to pay and our buildings have continued to generate the $100,000 a month. So that's the reason why I'm against becoming a fully fledged REIT. It's for a certain kind of individuals. At the moment right now, that's the beauty of investing with Orbvest. You know what you're getting into, you know what your returns are going to be. And just like all our other investors in the world, I think most people will be very relieved when they actually realize there is investments in the world that you can get into easily and simply, and with our partners, Finalutions, and you can get this consistent return. Whatever's happening in the world, you can know if you're getting 2% on the next quarter, your 2% will be in your account at the end of the quarter. And that's what Orbvest is and what we do. And it's been the success of our model. And so I really am excited about building a strong brand in India. And I want to thank everyone for their time today.